Hello, my name's Scott Phillips. I'm here to talk today about all of the USPs that we have at Kent Reliance to help you place more business. After speaking to the TMA help desk, they've asked me specifically to speak about professional landlords, limited company applications, and shared ownership. Effectively, what I'm trying to do today is help you to place more business, help more customers. Firstly, let me tell you a little bit more about Kent Reliance. We are part of the One Savings Bank group. One Savings Bank is made up of 4 different brands: Heritable Finance, Prestige Finance, Interbay Commercial, and Kent Reliance. OSB has got a UK bank balance sheet of over £9 billion. We've been floating on the stock exchange for the last 4 or 5 years. And the 4 brands together, Prestige is our second charge lender, Heritable Finance is the development finance, Interbay Commercial is semi-commercial, commercial, bridging. It does the larger buy-to-let loans that we can't help you with at Kent. And hopefully you've heard of Kent Reliance, who fundamentally we've thought of as a buy-to-let specialist lender, but we're trying to lean a little bit towards helping out a lot more residential deals. So we're hoping to do a lot more specialist residential deals with you this year, and I can explain a little bit more about that a little bit later on in the slides. Firstly, though, the buy-to-let market. I want to go into a little bit of background over the last 3 or 4 years to explain why it's become a little bit more challenging, but hopefully allay a few of your fears and start thinking about speaking with us and our BDM team and writing more business. It was probably 3 or 4 years ago when the additional 3% stamp duty was introduced and also the tax tapering began. This led to a concern that the buy-to-let market would overheat, and therefore the PRA conducted a full review of the buy-to-let market. So this in turn led to the income calculation rate changes, which started in January 2017, which was, in layman's terms, just tightened up the whole stress rate, made it a little bit more difficult to place business. And later on in the same year in October, the PRA set out new rules to define what was a professional landlord in their eyes. And they chose in their wisdom that this would be 4 properties, which surprised a few of us, which again would lead to more challenges from your existing buy-to-let client bank. Thankfully, though, there are lots of different challenger banks and specialist lenders out there who can help you. So although your customers may be leaning on you, that we are all out there as well to lean upon and hopefully place these cases for you. So what the market was trying to do, they're trying to make the buy-to-let market more professional, reduce the number of dinner party landlords, reduce the number of accidental landlords or hobby landlords, and make the whole market a lot more professional. And that's certainly what we've seen here at Kent Reliance. Even before all of these changes, one of the Kent Reliance general rules which is still in place is that any landlord that comes to us can have any number of properties either with us or with any other provider, and the value of those properties can be endless as well. So we're always very, very used to dealing with large landlords and supporting them and helping them. So a lot of these changes didn't affect us nearly as much as it did some of the other maybe bigger, more vanilla providers. So how has the market grown in those last 3 or 4 years, and what have we seen? We've seen a lot more purchases now within a limited company. The main reason for this is that some people are taking advice from their accountants, and they're trying to counteract the tax tapering. So with us, you can put it into a specialist property vehicle, so a specific limited company set up to purchase properties. We're also seeing landlords chasing yields. So historically, you may well have a landlord who had 10 properties all within their local vicinity, but now in order to chase a better income, better yield, they're looking further afield, whether that is in the Midlands, Northwest, Northeast, maybe looking at HMOs or multi-unit freehold blocks as well, as opposed to a typical terraced house with a professional family looking to diversify. Because of this vacuum in the market and the lack of support coming from the more vanilla providers, you've seen a lot more specialist or challenger banks come into the market. And the great thing about that is you have more choice, you have more options for your customers. There continues to be an increase in the demand for renting. Main reasons for this might be just a lifestyle choice. It may be because people cannot afford deposits as easy as they had done in the past, and because we're still not building enough properties to help people get onto the housing ladder. but there are a number of great remortgage opportunities, mainly because the rates are still so competitive. So even if you've got a customer who's just trying to save some money, they can remortgage onto a very low deal, which would be unthought of 3 or 4 years ago, or potentially raise money, capital raise, increase their gearing, and maybe buy a new property, or for any legal purpose with us, you can capital raise to help in any way possible. But we are certainly seeing landlords diversifying. So diversifying in the sort of properties they're looking to buy, and also the tenants they're looking to put into those properties. And of course, reflecting back on looking further afield up into the north. And the PRA have been successful in that the market is becoming a lot more professional. What we've seen at Kent Reliance is that we're still doing as much business as we ever have done, but what we're seeing is the professional landlords are buying the properties that are being sold by the hobby landlords, the accidental landlords. So those buy-to-let properties that were being sold are being bought by a different kind of landlord. So how can Kent Reliance help? Well, first of all, I've already touched upon that we do accept limited company applications. So it must be a specialist property vehicle. We must have personal guarantees for your directors. We don't need any SIT codes, and we can help you at Kent Reliance. We have got competitive income calculation rates, but we have got a leaning towards our specialist products, so HMOs, limited companies, and towards those limited companies customers that come towards us. We're seeing a big growth in HMOs and multi-unit freehold blocks, with our professional landlords looking to diversify, looking at larger properties, splitting it into flats because they get a stronger yield to counteract the more competitive income calculation rate changes. We will look at non-standard properties, and we'll certainly look at complex cases. So you might have 1 or 2 or 3 different quirks along with a case, then please come and talk to us. We are a manual underwriter, no soft footprint, no credit score. We are a grey lender, so you need to speak to us. So if you're not engaging with our help desk, then find out who your local BDM is and talk to them about these different cases that you will encounter. A classic USP with Kent Reliance on buy-to-let is that we have no minimum income, and we do lend up to 85% loan to value. I already touched upon we do have no portfolio limits, so you can have a huge number of properties with us or someone else, and we don't mind about the value either. And we're very sympathetic when we're looking at large loans. The buy-to-let hub in the middle there is an interesting one, because what we try to do to help our customers, help our firms, help our brokers, when the professional landlord PRA change was introduced in October 2017, was we teamed up with a software company and we helped them design the buy-to-let hub. So what this enables you to do is to upload all of your customers' background portfolio of properties straight onto the system, whereby we can assess the income, 125% at 5%, and then as long as and that's a blended rate over the entire portfolio, as long as that meets 125% at 5%, we can almost ignore those properties and then look at the new purchase or new remortgage. So it's very simple to upload the system. You've got to register for the first time, speak to our help desk, and they can help you set it all up and almost upload the system for you. I did mention residential. So here I want to touch on what we're doing with residential, what we're good at, and also touch upon Interbay, our colleagues at Interbay, which I mentioned at the beginning of the presentation. So we're very, very good at shared ownership, and we have been for some time. So with regards to shared ownership, we like to think the world works. You might go and speak to Halifax first, maybe the Leeds as well, but if they can't help you for whatever reason, then you come and talk to us. We're a lot more sympathetic with regard to income multiples than those other 2 lenders. We can take a view on maybe a little bit of adverse, and as importantly, we have our own shared ownership team within our underwriting department. So we're very, very aware of the need to get the cases in and out of the system as quickly as possible. Self-employed, it says self-employed for 1 year here, but what we're trying to do now moving forward is use the experience we've got from our buy-to-let underwriters and how comfortable they are at looking at accounts, and then trying to help them with regards to residential proposition as well. So we did a little bit of research, and what that research told us that generally self-employed earn more money than us employed personnel. They have larger loans and they've got larger deposits. So typically, as a bank, that all sounds like good business to us, but then it's finding a way of trying to help these particular customers. Again, I would urge you, any of these sort of cases, to speak to your BDM and run the whole case through them. Our general philosophy is, if you've got a good story, if it's reasonable, if it's feasible, and you can evidence it, importantly, evidence everything you're telling us, then we will have a look and try to help. We can help you with contractors with a daily rate. We can help you with interest only as well. We go up to 85%. Near prime, we've now got 3 different products, 3 different sets of criteria of near prime. We launched this about 18 months ago. So the near prime one is at 90%. We have got the facility to ignore any CCJs or defaults up to the value of £500 that may be either mail order, communication or utility bills. Because they're being fired out, so many at the moment, that we can take a view on them up to £500. So 3 products, 3 different sets of criteria, depending on the severity of the issues your customer might well have had. But we are trying to help them credit repair and get them back on the housing ladder. We even consider debt management plans as long as they've been satisfactorily conducted for at least 12 months. When we're talking about Interbay, the 3 main things to think about with Interbay when looking at Kent, when does Kent stop and Interbay begin, is with regard to trading SPVs. So a trading limited company, we can't help with Kent Reliance. It needs to be set up purely to hold properties. But if you've got a trading company, Interbay will be able to help you with that customer. Another reason would be, I've mentioned on the previous slide about HMOs, we'll go up to 8 to 10 beds of HMOs at Kent Reliance. You've got a larger property, maybe 12, 14, 20 or even 30 bed HMOs, then Interbay will be able to help. And they are doing plenty of deals with that sort of size property as well. And finally, as importantly, if you had a customer with 10 properties with Kent Reliance, they'd have 10 individual products. Same customer may well be able to go over to Interbay and have these 10 properties all under one product, which simplifies the whole process for them. Bridging is a brand new proposition with Interbay as well, brought out about 12 months ago and has been refined over that 12 months to be easily accessible, more user-friendly, getting feedback from our broker colleagues. So if you've got any bridging potential, then again, please speak to your Interbay BDM. My colleague Matthew Taylor has recently done a webinar also with TMA, so that should also be on their website. Please have a look and read through and give Matt a ring. BDM coverage, we've got about 8 or 9 BDMs out there now. So if you go onto our website, go to contact us, put in your postcode, then your local BDM details will pop up. Can't urge you enough to get a relationship with your BDM, speak to them. There are so many nooks and crannies that Kent Reliance and Interbay can help you with, which we don't always write down. The main issue with this will be because of the fact we still manually underwrite, but we are a common sense lender. But to find out the best way of using us and how we can help, please speak to your BDM. So near prime, as I mentioned, near prime, yes, we do CCJs, defaults, credit card debt, arrears, IVAs, former bankrupts, former repossessions, and we will consider payday loans. The key really is to speak to your BDM. As I said earlier, 3 different products, 3 different sets of criteria. Near prime one is up to 90%, so very sympathetic when it comes to looking at a deposit. Shared ownership. So what are you going to do and how are you going to help your customers when Help to Buy disappears? I did read recently that it's maybe extended for another 2 years, but in the meantime, our shared ownership proposition is there to potentially help. I know a number of housing developers looking at different ways to support the new build market. Average age of a first-time buyer, it says here, is 27. I'm pretty sure I read somewhere it's over 30. But I know a number of different lenders are trying to help and offer shared ownership in order to support the Help to Buy market. Again, speak to us. We've got our own team within our underwriting department to get deals in and out quite quickly. We do have the facility to staircase up to 100% as well, as long as your housing association can support your customer with that. I mentioned self-employed earlier. Self-employed is a relatively new area for us in that we're trying to look into it a lot more than we used to because of the market research I mentioned earlier. It used to be mainly the domain of the building societies up until recently, and a number of different building societies can help. But if you can consider us as well, that'd be fantastic. We're very sympathetic with regard to the accounts. And if we see an increase over 3 years, we'll definitely try to use the last year. If we need to average 3 years, tell us a story with regards to why the numbers have gone up or down, and we can be as sympathetic as we possibly can. So thank you for listening. So in summary, hopefully I've highlighted a few areas where you can use Kent Reliance and consider Interbay as well. Make sure you can speak to our help desk if you haven't registered with us already. It takes about 5 minutes to register. Speak to our help desk and they can talk you through the whole registration process. Make sure you know your BDM, probably number one tip. We manually underwrite, we don't credit score. It's a soft footprint, common sense approach to lending. So make sure you speak to your BDM, make sure that the case is it's a good story with it, it's reasonable, feasible, and you can evidence it. And the more notes you write down and tell us in the outset with AIP, the happier we will be. It counteracts and negates any questions that underwriters might want to ask. It's all about helping you to write more business. So hopefully there's a few more ideas, or maybe that you might be referring to other people at the moment that we can help you with. And if you speak to us, we're very happy to hold your hand through the whole process. Thanks for listening.